Hi, I've held the iShares UK Dividend ETF in my recent stocks and shares ISA for the last year. In this video I'm going to give you a quick overview of the ETF and sort of take you through where can you find it, price, performance, what dividends it actually pays, and some of the pros and cons of owning this ETF. Hey friends, welcome back to the channel. If you're new here, I am Mark of Desperately Seeking Fi. As I said, I was going to take you through where can you actually get the iShares UK Dividend ETF, or under its ticker symbol of IKUD. So you can get this on basically any normal platform. So you could get it on things like Invest Engine, Trading 212, Free Trade. I have links to all of those down below if you're interested in having a look at them. I'm going to take you through some of the details found on the BlackRock website. What are we going to go through? So first of all, what is IKUD? So it is basically diversified exposure to UK companies that have a higher dividend yield, and basically this is a subset of the FTSE 350 index, and in reality it is 50 of those top companies. On the BlackRock website you get a lot of detail about the actual fund. So first of all you get what its price is as at the most recent day. You get to see what the change is over a day and what the change is over year to date. As of the 5th of January, this fund was up 3.21%, and that's not bad compared to the climate that we've been in. Other things that it has on this page, so up in the top right hand side you have the key information document and prospectus fact sheet, and you can also download some of those details. Jump in, have a quick look at the performance of the fund. We get just this quick chart in the top left which allows you to jump out to a full chart if you wish to. What you can do is you can do on the performance side of things, you can look at the different returns. So you can either look at it on a straight calendar view. What you can do is you can have a quick flick through some of these other tables which show you the discrete annualized, the annualized, and then a cumulative. Since the inception of the program, we're looking at this fund having returned 73.34%. Some of the key facts about this fund. So it was launched in November 05. It is a reasonably large fund with 877 million in it. One of the things that is really important to look at is the total expense ratio. This is higher than most of the other funds that I would be looking to invest into, because I'm obviously looking at low cost index funds, and you have things like VUSA coming in at 0.07, you have the FTSE 100, so VUKE coming in at about 0.9 I think it is. This comes in at 0.4%, but it is up to you to do the weighing and balancing when you look at what it actually pays out in a dividend. Are you happy to lose that 0.4 cumulatively over years? The issuing company is obviously iShares. Dividend is this trailing yield, and that is giving us 6.22%. That is much larger than VHYL, is somewhere in around that 3.8%, and that is the Vanguard version of the FTSE All World High Dividend Yield ETF. So VHYL is one of the competitors that IUKD would have. And let's have a quick look at the actual holdings within this fund. This table basically gives you the different ticker symbols of the stocks that they invest into, the sector that they're in, and then looking at what that weighting is of the different stocks that we're investing into. All of those names in there are probably very well known to us. You can then look and see what the other 50 are by just clicking through, or we can go and have a quick look at the detailed holdings. And this just gives you quite an easy to view Excel spreadsheet showing you all 50 of the investments that you would be picking up if you were having this ETF, this basket of funds, and would save you having to go and invest into them individually for that cost of the total expense ratio of 0.4%. What we see in this table is basically that exposure breakdown of whereabouts you are invested into, and you will see for IUKD almost 30% of this ETF is focused on financials. And if we have a think back, you are looking at there were companies such as Legal & General, HSBC and Aviva in that top 10, so it shouldn't come as a huge shock that that is where the focus of IUKD is. Going into this financial year, that might actually be quite a good investment, as we're potentially looking at interest rates continuing to rise in the UK, and that therefore may have a knock-on effect of some of those banks and insurance companies being slightly more productive and growing income over this financial year. And then down at the bottom you have the different literature. What I would recommend is you go and have a look at things like the KID, the key investment documents, and the fact sheets and the prospectus. And if you wish to, go and have a quick jump into the different annual reports that exist as well. So there are lots of pros and cons to this ETF. Some of the pros being the diversification. You do get a good diversification across those 50 different high dividend yield companies that are based in the UK, and slightly better than you just investing into individual stocks. Also, the income, that dividend yield of 6.22% is high for an ETF. One of the best that I hold within my portfolio, and it is very attractive to those people looking to generate an income. It is relatively low cost. However, there are other ETFs out there that are much lower costs. Some of the cons or some of the disadvantages. So market risk, as we have just seen over the last year, things could drop at the drop of a hat. There could be a black swan event that causes us to lose money on our investment. So your investments may fluctuate, but on the other side you still have that dividend coming in, so there is that potential that could balance some losses that you have. Sector concentration, potentially with that 30% in the financial sector, that could be something that is a bit of a disadvantage, but that is up to you to do your own due diligence and see whether or not that is a kind of weighting that you are happy to have within an ETF. It is focused on the FTSE 350 companies, so with that comes a limited market exposure. It is focused very much on UK companies. While they do have business across the world, I think it is something like 50% of the income of those companies will come from outside of the UK. Really important that you balance those pros and cons and do your own due diligence before deciding to invest. What I have done is I've done some other videos on different ETFs, so go away, have a quick look at those and see if any of them fit your investing strategy. So thanks very much for watching, and I'll see you in the next one.